Hello traders, welcome back to my channel. My name is Taco and today I'm going to share with you certain things that you have to see in the market. So most traders lose money not because they can't predict the market, but because they don't understand where the market actually makes decisions. So today I'm going to show you how to use supply and demand and order blocks to identify high probability trade setups in Forex without indicators, without guessing, and without chasing price, which is like one of the things that most people usually do. So here, like, I have like three forms in which the market usually moves, right? So we have a sideways movement, and we have an upward movement, which is like the bullish movement, and we have a bearish movement. So these are the ways in which the market usually moves, right? So the first question is, what really moves the market, right? So the Forex market doesn't move because of indicators. It moves because of buying and selling pressure, right? Large institutions placing massive orders. So whenever you see like candles moving drastically or like large volumes, you know that institutions are in play, right? And most times, especially if you're trading things like the Nasdaq, the US 30, or you're trading USD JPY, that usually happens in the New York session. When the New York session starts and you see volatility in the market, you see big players stepping into the market. So how can you actually make money with these moves, right? So this is what I'm here to talk about today. And when price moves aggressively in one direction, it means orders were filled unevenly, right? So whenever you see price moving like this, you know that orders were filled unevenly, and that means there are some orders that were left unfilled here, and the market has to come back and retest and open those orders and then continue going in the direction of the market. So that is where you actually need to tap into the market in order to see how you can actually make money, right? So you can see that in this first pattern that I drew here, right, you don't have any opportunity to do that because the market actually doesn't break any levels, right? It just keeps going sideways, right? Which is like a place like where most traders find themselves getting trapped in the market, because the market is not going anywhere. It's just like, going sideways. So you have to be careful. You have to actually know where the market is going so that you can actually see these moves and how they are happening. So let's talk about supply and demand. So demand zones, a price area where buyers overwhelmed sellers, right? So this is where the buyers overwhelmed the sellers and caused an aggressive move to the upside, as you can see with this illustration here. So price leaves the zone aggressively to the upside, represents unfilled by orders. So we can see that here there will be what? Unfilled by orders, right? So this is where your demand zone usually is, right? So what are you waiting for? You're waiting for price to come back to your demand zone, tap into that, give you good confirmation, and then enter your trade and then continue going bullish, right? This is the things that I trade. So let's talk about supply zone. So this is like the opposite of a demand zone, right? A price area where sellers overwhelm buyers, price drops strongly with large momentum from a zone, right? So we're talking about something like this, right? Price falls aggressively, breaks the structure, and then price comes back to retest what? This supply zone, okay? Right. So how does supply zone and then order blocks come together, right? So I'm going to talk about an order block. Most people usually ask me like, what is an order block, right? So an order block is the last opposing candle before an aggressive impulse move, right? So we're seeing that here we have an impulsive move, right, to the upside. And we're saying that the opposite candle of the bullish, right, of the bullish movement is the what? Is the order block. So we're talking about, usually have like red and green candles, right? So in this instance, is the what? Is the last red candle before this movement happened, right? This is your order block. And here the opposite is also true, right? The last green candle before this movement happened is your order block. Right, so a bullish order block, the last bearish candle before a strong move, right? And we have a bearish order block, which is the last bearish candle before a strong move down. Okay, so these candles represent institutional orders placement, right? These are where big orders have been placed, and this is where you actually need to to make sure that you can make some money out of the market with that. Okay, so like important insights for you to know, right? Order blocks are the origin of supply and demand zones. So this is where it actually then comes together, right? The supply zone, the demand zone, and the order block. Order blocks are the origin of the supply and the demand zone. Not every supply or demand zone is an order block. You should know that, right? But every valid order block creates supply and demand. So you're supposed to know that and, put that in your trading as well, right? So then how can you identify high quality order blocks? Because not every order block will actually come to, to make you profit in the market, right? You actually are supposed to identify the strong order blocks in order to use them, right? So most people don't usually like going over the higher time frames, like the daily time frame or the 4-hour time frame, of which those are really good time frames for you to look at the best order blocks for you to actually use. So I'm going to look into the charts after explaining all this to you so that you can see some examples as well. So strong displacement, right? Price moves aggressively. You need to have an aggressive move to the upside or an aggressive move to the downside for you to start realizing that something is going on in the market, right? Large candles, minimum pullbacks. We need like aggressive move to the upside or to the downside. And then we need to have a break of structure. So what do we mean by a break of structure? We mean that there's a structure like this, right? You can see this is a structure, and you can also see this is a structure, right? So what do you need to see in order for you to see that this is a valid order block? You need to have an aggressive move to the upside, and you need to have a break of this structure, a clear break of this structure. And what else are you going to look for? You're going to look for price to clearly and cleanly come back to retest. You don't need price to be aggressively coming down to test this order block, because that is when you have price going downwards and then coming backwards. You need to have price moving gradually to your order block and then continue going to the upside. So you need price to come back slowly and respectfully, right? And then the last thing that you actually need to look into is the first thing that I spoke about: higher time frame alignment. The daily and the 4H time frame, the order blocks carry more weight than the 5-minute and 15-minute time frame. Whenever I'm doing this, I don't even look for order blocks in the 5-minute area or the 15 minutes area. I usually look for my order blocks in the 4H time frame, and then I refine them in the 1-hour time frame. So I'll actually talk about what it means to refine an order block when we're looking at actual examples. Okay, so now let's talk about using supply and demand as a strategy, like a generator for you to actually make some money, right? So you need to identify the trend of whatever pair that you're trading, right? That's the first thing that you actually need to do. Move to the daily time frame, see if it's a bullish trend or a bearish trend. If it's a bullish trend, then you're looking for what? You're looking for buys. If it's a bearish trend, then you're looking for what? For sells. This is what I mean by a bullish trend. This is what I mean by a bearish trend. So if you see something like this in a daily time frame or the 4H time frame, then you're definitely looking into what? To buying the market. And the opposite is also true for this. And when you see the market behaving like this, you just have to stay out of the market and then wait for the market to break these limits here that have been placed here. These limits, wait for the market to break these limits, right? Whether to the upside or to the downside, then you make your move on that. So let's now talk about entry confirmation. So whenever you see an order block, it's not necessarily meaning that you have a break of structure, you have price pulling back to the order block, and then you just enter. You need to see confirmations here for you to enter. You need to see at least like weeks, right? The strength in buyers and the weakness in what? In sellers. You need to see confirmation patterns like the morning star, like the bullish engulfing. You need to see those confirmations in order for you to actually then say, this is a good move. Let me actually place a trade and put my stop loss here. So that is one thing that I actually like about order blocks. It's where you have a clear place for you to put your stop loss and your clear place for you to put your take profit. So if it's me like entering into a market like this, right, this is what I'm going to do. I'm going to go along here, right? I'm going to put my stop loss right beneath this previous low, right? And then my first take profit is here, right? A clean 1:2 risk to reward ratio, and you get that, right? Once your profit hits here, you can actually start increasing your take profit, but putting your stop loss in profits and securing your profits. That is how a smart trade actually trades, and these patterns keep happening over and over and over again. So we're going to look at examples so that you can actually relate to these things more clearly, right? So the last thing that I would also want to talk about is risk management, right? Like I was talking to you about, like 1:2 risk to reward ratio, which is really good, and minimum of 1:2 risk to reward ratio or 1:3. You don't have to be greedy in the market, right? You need to look at the market and see where you can actually make money and value in the market, and then make considerable decisions and get out of the market before it traps you, because that is what usually what the market does, right? So today is Monday, and I would like us to look into some examples, right? Okay, perfect. So we can see that we have the British pound against the US dollar, right? So you can clearly see that we have a bullish movement out here, right? And we have a break in that structure, but still we're still having a bullish movement over here, right? So put our trade line like that, and we have this touch, that touch, and that touch, and we can see that we have a bullish movement. Okay, so let's move to the 4-hour time frame in order to see clearly what's happening in this market, right? So if I was in this market, this is the first thing that I would mark out, right? This area, this structure here, this very strong structure, because like it was retested multiple times here, tried to break up, but it couldn't. And the market came here and broke out of this, right? Broke out of this structure with, you know, huge momentum, right? And it clearly broke the structure. So what are you looking for? You're looking for the last candle that was responsible for that move, which is this candle. And what are you waiting to do? You're waiting for the market to come back gradually to that position, tap in with wicks like this, and then continue going bullish. Look at this impulsive move. This is exactly what you're looking for, right? And you can also see here that price actually broke this structure as well. It was retested like twice, broke this structure, and then left this order block, right? And it's not every time that the market comes back to retest that order block, right? So market didn't come back, it didn't respect that, it didn't come back to retest. It's okay. These things keep happening in the market, and there's always an opportunity for you to actually look for another place when it happens, right? So you can see here we have the same thing that's happening right now, right? We had a break of this structure, right here, and we have this order block. So what are you waiting for to see? You're waiting for price to come back gradually to this, give you the positive signs that it's going bullish, and then place your trade, and then that's how you get your money. So maybe I've been talking for a while, but I really wanted you to really understand what supply and demand really means and how to use order blocks. So I hope this video was helpful, and please let me know in the comment section what you want me to talk to you about. But this is generally the strategy that I use to make money in the market. I hope you have a great day. Cheers.